back in the day, 20, 30 years ago, S&P 500 or American stocks, for example, these stocks would do most of their business all inside the US. So you'd get no international exposure to companies that did their business abroad. Nowadays, almost every big company in the S&P 500 or in the US market are all the big stocks, and they do a lot of their business outside. So I checked the latest data is the S&P 500, it's about 71% of their business is done nationally and 29% is done internationally. So that's quite a big chunk. And it's about the opposite, if not a bit more extreme, when it comes to UK stocks. So the UK market, 75% of their income, the FTSE 100, comes from international. So it's a very weird market. So I look at those things and think, okay, well, the traditional argument has said that you don't want to put all your eggs in one basket. You want to be well diversified. But is the American market diversified enough? And you could make a strong argument.
The 70-30 is reflective of the size of the market.
It roughly is.
Because 65% of the global stock market's America. So it's almost like they have a global
They do,
equity.
but then you also think, so like I mentioned on the FTSE 100, you've got plenty of companies, they're not amazing companies, but you've got plenty of big companies that sell everywhere. You've got other companies in Europe like LVMH, the Louis Vuitton, Moet Hennessy.
You know that one, don't you?
Yeah, you know that one.
I'm familiar.
He was pretending, I've never heard of these brands before. But you've got all these companies. They're not as there's lots of household names out there, and just because they're not headquartered in the US, does that mean I don't want to own them? Because if we come back to that position of having a bit of humility, none of us have any idea which company their share price is going to do really well. Going back to the research and the books, there's a great book called 100 Baggers. So it talks about companies which have 100 bags. That's companies that have 100x their share price, right? And there's only been during the period that he looked at the market, there's been like 365 companies who have ever 100 bagged in, I think it was like a 40-year period. It might be more, could be less. You have to correct me on that one. And the median time it took a company to 100 bag was it's like 16 years. So anyway, bit of a tangent on that one.
From like a penny stock to...
Well, it could be from anywhere,
Is
basically.
Monster one of them?
Yeah, so I was just about to say,
Energy.
right, just because it's a crazy one. Now, NVIDIA has now overtaken it to be the best ever stock there's ever been from performance-wise.
NVIDIA is the best ever.
Yeah, from IPO to now, because it overtook it massively recently. But before that, it was Monster Energy. So it wasn't a tech stock. It wasn't a crazy household name like Apple. It was Monster Energy, which is crazy, really.
And which is pretty bad for you, right?
Well, yeah, arguably. Yeah,
Not for your wealth, mate.
I'm not a fan myself. But again, we're going to go on all sorts of tangents this one, because this question is so fascinating. But so you got diversification you could argue you got diversification in the S&P 500, but then I would argue, because we're so global now in the way companies sell, that just because a company's headquartered in the US, it could get all of its revenue from Europe and the UK. So it's not as easy now as just saying global or US for diversification. I always default back to having been a bit more global. If you added my individual stocks, I'm probably weighted a bit more toward the US, but that's the way the market has deemed the values of the companies. So I always default back to just saying being global, because I don't know for the next 10, 20, 30 years if European stocks, emerging markets, can't research the future. Some people think you can, as I said earlier, but I would default to that. But I can play devil's advocate for all sides.
This is the point. Like, I could argue now against you or for this argument really strongly, and both are compelling. And this is why I go global, because I think it's like, you're making a decision if you go America, aren't you?
Yeah, to a certain extent
you're betting on the market,
exactly,
like, to a point.
Yeah.
Whereas you can just own the globe, and that has served people very well. Yeah. And then you can go get on with your life and focus on your day job.
That the annoying thing, I suppose, for global investors like us is that we look at S&P 500 charts and we're like, you know what? That's quite a lot. You miss out on a couple of % a year. That's a lot in your lifetime. And then you say, should we just continue with that? Because the S&P 500, although it is a passive index fund, there's a committee who chooses the stocks that go onto it. So I forget if it's every month or every 3 months, but they meet to basically demote the crap ones and put new companies in. Now, a global index fund isn't really doing that. It's just tracking the market. So the S&P 500 almost gets a little bit of active tracking, They kick out the crap and they put.
There was a debate if Tesla should go in. There's a debate around like MicroStrategy. Like with Tesla, it rose so quick that they were going, is this just a bubble?
Yeah.
So should we kind of include it to kick it back out again?
That's right.
Obviously, it made it into the index.
They don't just put you in because of your size.
Yeah.
So they do look at like volume and stuff and ownership. So it's quite an interesting one. But yeah, I always come back to that ignorant position that says, I have no idea what's going to happen to the market, what company's going to do best. Because let's talk about this new AI revolution, right? So AI, you could argue, is the future. Probably, yeah? AI, robotics, automation, probably the future. But the internet was the future back in the dot-com bubble. Cars were the future back in 20s, 30s, 40s, right? But the companies that started then weren't the ones that succeeded now. And I don't know how you can identify which ones are going to succeed. So it may be the big companies of today, which might end up being the winners. It could be the OpenAIs, it could be the Teslas, or it might be a company
from China
that's never started yet, or from China, or from India, who's literally 2 people in a shed right now, who could turn out to be the biggest company in the world. And do I want to bet that they're going to be in America? They might be. There's a good chance they might be, but why do you need to bet? I don't know.
I mean, like, I think you said it in one of your videos, like the performance of the past 40 years or whatever doesn't mean that it's going to happen again. So America's been dominant for so long. China's just released this AI and it shook the whole stock market and crypto market in one. No one saw it coming. So like just that kind of makes me feel I'm happy that I'm in a global, and I'd rather stick to global, because if suddenly China just goes like that and America goes like that and you've got it all in the S&P 500, it's not going to be, it's going to hurt you a lot more than if you're in a global fund.
I think so, but I could be wrong. Like Damien, I could make a very good case for S&P 500.
Because the American market is structured in a way that supports that it's in their DNA.
It's in their DNA. And also like any national government, their job is to look after, not look after the stock market, but they're going to promote their own market. They're going to have good tax strategies or low corporation
and they're
strategies.
So big and powerful that they can do that through force.
They're
going to
dominate that through tariffs.
Like literally, if their market starts to slide, they will push against the world. And so they've got tools to put the dollar. I mean, the dollar is so dominant, right? So I think even if America does slide, it's a long way down.
Yeah.
And I reckon that you could pick either strategy and do very well for 100 years.
I think the bottom line of this argument is it almost doesn't matter which one you pick. I think there's far more important things to worry about, and that is getting money into the market for as long as you can,
your contributions,
as consistently as you can.
Your contributions.
Those are the core investing foundations, which sounds so easy. It's like a fitness influencer saying, right, so if you want to get some big muscles,
I already do.
You've got big muscles. Yeah, I've already seen it. This man doesn't need any bigger muscles; they're massive. But if you want even bigger ones, you go to the gym, 4 or 5 times a week, and you need to progressive overload. You need to do these exercises, and that sounds obvious because you're like, well, doesn't everyone know that? But everyone doesn't do that.
Yeah. And instead they're like, let me take this pill, or let me like do this special diet or routine.
Well, everyone wants the Ozempic fat jab, and they can get themselves slim. And that might work for the short term, but that's not the long-term answer to your diet, is it?
And it's also like, do the compound lifts, eat well and go to sleep. These are the things. Whereas people will be like, oh, if I hold the weight like this or like this, and this is the debate.
Too much. Yeah.
It's like
do I do 10 reps or 11 reps?
Yeah.
When I think, just choose one, but just do the reps.
And do it consistently.
Or they'll go to the gym and not eat right, or go to the gym and like sleep 1 hour, and it's like, why am I not growing? Because you're not eating right, because you're not sleeping. That was a clip from our chat with Toby Newbatt, personal finance YouTuber. To watch the full episode, click right here.